According to UBS analyst, Hartmut Issel, although Chinese stocks like NIO, XPeng, and Li Auto have lost more than half of their value, they still have the most potential. Currently, Chinese stocks are not in any financial distress. The only headwinds Chinese companies have to worry about is their planned future growth projects. Chinese companies will need additional cash if they plan on going further into the global market. Issel also noted, because China has such a large population, as well as a robust economy, cash reserves should not be a problem. Companies like NIO are continuing to increase its production and model capacity in China. Since NIO announced their ET7 sedan, they have already began developing 2 additional sedans which will be released in 2022. Issel expects all Chinese companies to see an increase of sales by the end of 2024. The chart being shown right now is Issel's expectations for China's growth. Issel believes China will surpass the US in growth prospects in the next 10 years. Here is a snippet of Issel's interview with Bloomberg.
We just go about a month back or so. China, especially offshore, was actually probably the best performing large market. It's not so long ago. So, basically what it shows you is, these sentiments can swing very quickly. But why haven't we upgraded it? In particular, because it's the only really large economy on the planet right now that is actually losing, right? Everybody else is either standing still or tightening. And we're seeing very early signs, be it in the property market, property pricing, where, seeing some stabilization. We do expect a little bit more loosening. It's actually, if you tie it in also in with the massive underperformance that we had seen over the last 18 months or so, still think there's reason to believe that this is attractive rather than something to be too scared about. We believe it's pretty clear they have a bit of a cycle of their own, shouldn't be too rate dependent. And also, if I look at just the performance of the Chinese market again over the last 18 months, it doesn't really suggest that you're extremely rate sensitive to the US at these levels. A lot of the previous growth stocks have become value stocks by now. So that is something that I don't think should have too much of an influence. And here also in the regional strategy, as we mentioned at the beginning, we're still pulling through with that overweight on China.
That's what's been happening this week in the world of NIO stock analysis and predictions. If you haven't subscribed yet, make sure you click the subscribe button at the bottom right and subscribe to Financial Health right now, so that next week you'll get the inside scoop on the latest developments to keep you and your business on the leading edge of NIO stocks and predictions. If you enjoyed this edition of NIO stock analysis and predictions, leave a comment and please hit the like or share button. We'd really appreciate it. Are you still watching and want more? Check out last week's NIO stock analysis and predictions by checking out our NIO playlist.